Well, we have made it to mid-April, and Austin continues to make headlines as a top buyer's market in the US. That means higher supply and tepid demand. But is that the story in every zip code? We'll take a look. Well, this is the latest article out of Inman that highlights some of the hottest and coolest markets in the country this year by rankings. And we're going to continue to see coastal markets, Northeast doing well. And we're going to continue to see the Sun Belt where we are cooling off. So we're going to zip all the way down here and show it to you as a chart. I think it's easiest to see here. So if the more purpley dark colors, those are the stronger housing markets. If you look at the very light, the orange and the yellows, those are the slower or more buyer-friendly housing markets. Well, it's pretty easy to see. The hot markets are up here, Midwest and the Northeast, and also on the West Coast. You have two things going on there. Number one, they didn't have a lot of supply. And so they didn't build a lot of housing in those areas. And then you also have land restriction, especially on the West Coast markets. And so, it's hilly, you have oceans, you just don't have a lot of room to build more supply. And so they continue to have stronger housing markets. But as you come down into the Sun Belt, and that includes, we'll include Denver in there, but you have Phoenix and Tucson, you have all the major Texas markets, you have New Orleans, Nashville, Atlanta, Florida. So when you look at all those markets, this is where population is moving. It continues to move there, but so does development. And so all these places have been building a lot, building new homes, building new apartments. And when rates went up, you built for that high demand, and demand dropped down. It's not that there's no demand, there's just less demand to keep up with that added supply, and that's putting downward pressure on price and creating more of a buyer friendly scenario. So this is kind of the national map. Well, that means Austin is continuing to rank as a top 10 city for buyers. Part of that is our affordability is getting better. It's easier to compete as a buyer or get deals in the market. And so anyways, this article just touches on that. We're ranked number 9. Now, a couple of years ago, we were probably number 1 because after the pandemic, Austin really probably took the biggest punch in the face. I think Austin is starting to find ways to stabilize. We still have high supply. But anyways, top buyers market, mostly Florida and Texas are ranking in those areas. And right now, only about 8 to 9% of the homes are going to sell above the asking price. So that means 90%, pretty typical. When you have time, it takes a long time. Buyer isn't coming in with a full price offer. Most things are going to sell at or below asking price. All right. But does that mean the entire market is equally cold? No. This is where it's going to get a bit interesting. So stick with me. This is the Austin Metro right now. And we are tilting buyer to the right. When you see that, that is tilting to a buyer's market. We have high supply. If I come down here, you can see the 10-year average is that dotted line across the middle here. Well, we're way above that on supply. We're still peaking on supply. Supply is higher this year than last year, which was higher than the year before, et cetera. So supply continues to build up. Demand, however, that's where we're finally starting to see some green lights. You can see on the dark orange that is just right now touching above the 10-year average on demand. So we are seeing buyer activity pick up. It's not amazing. It's kind of average, but that is better than we've had the past 3 years where demand has been below average. So still way above normal on supply, but demand's finally maybe getting back in balance. But this is the Austin Metro. Let's look at downtown. Okay. This is 78701. This is mostly condominiums. And now look at the supply. Super cold. This is well over a year of supply. Thank goodness. There we go. We get a little pop in demand the last couple months. That's a good sign. But supply way above, almost double what we typically have as an average. So if you're selling a downtown condo right now, it doesn't mean it's going to take a long time to sell. It means a lot of you won't sell at all to anyone. There aren't enough buyers buying them. If we look up here at the actives, you have 283 condos currently for sale, 28 are pending. So, less than 30 buyers a month are writing a contract, and that's good. That's above average, but you just have well over a year of supply on condos. All right, well, let's go to some other parts of the market. Let's go to Southwest Austin. This is mostly single family. Totally different story. And so this is Circle C, Avanya, Meridian, neighborhoods like that. So, anyways, they're under 2 months of supply. And so they're having a totally different feel. It doesn't mean these homes are going to get crazy bidding wars and sell 50 and 100K over asking. I'm sure a house might do that. But typically, what it means is they're probably going to sell faster if they're priced well. And you have decent demand down there, but not a lot of new supply. And so what's happening is supply right now is below average. Not as many sellers are selling those homes, and demand is at least average and sticking with that, if not a little above average. So here you're getting a great story in 3.9. If I go to Northwest Austin, also a good pocket. This is like far west, uh, you know, parts of Millwood, Great Hills. These areas are popular, Northwest Hills. So they're doing okay. Maybe not quite as strong as Southwest Austin, but they're doing fine and probably feel pretty good. These are older homes, maybe 60s, 70s, 1980s homes. But they're, again, trending a little more towards a balanced or seller's market. Supply is up, but so is demand. And so it's hanging in there. And finally, I'm going to look at luxury. Again, different story here. So demand is up, though. This is a good sign. So what we're seeing is, for the first time in 4 years, demand is finally coming back into balance. I like to see that. What it hasn't yet changed is supply. So supply is still in luxury, 2 times normal. So we have lots of supply, which is why it's still tilting heavily to a buyer's market. Again, it's going to depend on which pockets you're looking in, but you can have a hot part of the market and a cold part of the market. So it's really important to know where you're selling, where you're buying, and to know what's happening on the ground, because the media is only going to have a national story or maybe a market-wide story, but nobody's really going to dig down and dig into neighborhoods or zip codes on the media level to tell you what's happening on the ground. That's why we like to look at data. So what's happening in the rental market? Not so good. So Austin saw the biggest drop in rent prices in the U.S. over the past 12 months. Austin fell about 3%. So nationally, or I should say, Austin rents, they're still up about 11.6% from 2021. So Austin had a huge rent demand go up. During COVID and even pre-COVID, rents were going up quite nicely. Well, of course, like the housing bubble, where we got overpriced. Same with rents. And this is where the supply really came into Austin, was in the rental market. Like, we built over 110,000 apartment units. I want you to think about that. I told somebody the other day, Round Rock probably has 150,000 people. You built 80% of Round Rock empty on top of the market and just kind of dumped it on the market within 2 or 3 years. Well, that's a lot of absorption. You've got to get 110,000 extra people housed. And what it did is it just waters down the market in every facet: sales, rents, everything. That is starting to fill up, but it takes time. And so I think that's maybe why we're starting to see demand pick up, but not the supply yet. So it's going to take another year or two to get that supply to start turning the corner and tighten up a bit. But just know rents are also soft. All right, let's talk about mortgage rates. So right now we're sitting about 6.39%. That is below the high we had a couple weeks ago, where we were up near 6.6. So what is happening? I'll take you down here. Obviously, you know about the war and gas and the Strait of Hormuz and all the things that are going on there, which is creating a lot of volatility in the oil market and the bond market, which affects the mortgage market. So this is looking back at the beginning of when we announced the war in Iran. We were down at 5.9. which was great, 5.99. And so then, of course, immediately the bonds and the inflation and everything started going up. Of course, Strait of Hormuz got closed, and then you really see the rates rocket up. And then, of course, we've hopefully eased some tensions and have the ceasefire going on. And also the oil market is watching to see if the strait's going to open up. We'll see what happens there. But anyways, all that affects the bond market, and inflation affects the bond market. And so we're watching how much pressure it's going to put on mortgage rates. We have seen rates come down a bit to 6.3. Now, that feels higher than 5.9. But here's what's important. If I go back to a 1-year chart, this time last year, if we go back to April last year, we were sitting right at or below 7%. And it was much slower because rates were, I mean, again, almost 7%. And then we spent most of last year just kind of trickling down, working down. We finally got down to that 5.9. Yeah, so they've shot up to 6.39, but that is still, 60 basis points lower than where we were this time last year. I think that's why we're seeing demand go up. And also consumers realize, look, we're not going to get fours again. That's not going to happen without crazy government intervention. So we are probably going to be trending in this rate range for a long time. We'll see how it plays out, but expect to pay in the 5, 6, maybe up to 7 range for the foreseeable future. I hope this is helpful. If you are a seller right now, the good news is we're finally starting to see some activity in some pockets. We're seeing demand up in different parts of town. This is 4.9. Again, some areas are starting to see that demand get back at least to average, and in some areas above average. So demand is good. But it doesn't bring you out of the woods yet. If you are a seller, your biggest competition is supply. And so we really want to see what's out there, who you're competing against, and how long we think it may take to position your house for a faster sale. If you're a buyer right now, again, rates are below where they were last year. We are seeing a little more demand out there. So don't be surprised if you find the perfect house. You may have someone else that thinks it's a perfect house too. So if it's early on the market, you might see a little bit of competition, but yet there's still plenty of deals out there sitting around waiting to talk to you because they've been on the market for several months and ready to get a buyer. Anyways, feel free to check out our videos each and every week on our YouTube channel at Ryan Kelly Group. You can click that subscribe button. And of course, if you know somebody looking to buy, sell, invest, or finance right now in Austin, we would love the opportunity to talk with them. Anyways, hope you enjoyed watching the Masters. I sure did. It's a little bit of a wet week this week, but looking forward to bringing a few new listings on the market and get some more stuff under contract and keep this market moving. We'll talk to you next Monday. Thanks.